The market, ultimately, this comes down to valuation. And the two problems that the market had from last August until 2 weeks ago was that it ignored signals from the bond market, and it actually made me think a little bit, this is starting to look like 87. And the other part was, obviously, we had a big earnings boost from the tax cut, but the market rallied well. It rallied well beyond that. The S&P rallied 450 points, but 200 points, by my count, was justified by the earnings gains, and the rest was just multiple expansion at a time when multiples are already super, super high. And the other part, of course, bond yields went up 80 basis points, 85 basis points, and the stock market totally ignored it. So the positive right now is that we have four things going for us. One, the stock market is listening to the bond market, which averts, I think, an 87 repeat. Two, we've given back 2 PE points, so that extra froth in the market since last August is gone. C, earnings, of course, are a really good story and probably will continue to be. And D, I think the bond market has largely done its job in repricing what the Fed is going to do. Near 3% on the 10-year is consistent with 4 or 5 more hikes, and I think that's pretty reasonable and certainly a lot better than last August when the market was pricing in only 1 more hike. So when I put those 4 things together, I see a market that is much more imbalanced than it has been.
Hey, Chris, are you in agreement with that? But I want to throw in the issue of multiples into this conversation, which is to say we're still hanging around, say, 17, a little over 17. Does it have to come down? I mean, if you think on a historical basis, we were living at 16.
Right. It would be great to see the market at 15, but I think times have changed. 17 seems to me to be reasonable, particularly as Jurrien said, now that it's come down. I think it gives investors an opportunity. I looked at the correction, since it was so short and sharp, as being more mechanical. And I think ill-conceived volatility products that people had a sugar high on, when will they ever learn? I think that was a big part of it. I think robo-advised rebalancing, where these robo-advisors don't hold widows' hands, and it winds up to be a mechanical thing. And also, I think a little bit the rest, algo trading, and you can put in Bitcoin and everything else into it. And I think really what comes out of that is that it only benefits a few investors, all of the algorithmic trading and smart beta rebalancing. So those really exacerbated what we had. Sure, we're due, and we're probably due for another one, but I think it was very mechanical.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.